We are trying to make things easier for retail traders. I think one of the things that is going to really help is June 4th coming up. We're billing it as Trader Independence Day, the removal of PDT trading. And sure, it had its advantages and reasons why it was created, particularly I think for a different time. Now people have a lot more freedom. I think people are a lot more aware of risk. We're certainly at the forefront of trying to do that, particularly like I said, I'm on the content side. And I think day in and day out, I'm always talking to people about how to manage their risk and what they have on and how big a position they may or may not have. Most of the time we're talking to people about one lots. We're trying to keep it simple for people. As they get more experience, maybe they can, level up. And units can kill you, and you don't want to get too carried away. People like myself and others who are talking about managing risk day to day, the different retail traders, kind of help prepare them for that.
How does fragmented market structure affect execution quality for retail traders?
That's something that I don't think they experience for the most part. I don't think they're experiencing that too often. I think one of the things we're always talking to people about is trading in liquid names. I mean, as boring as it may seem, but those names have not been boring at all, right? Like the Mag 7 names, Microsoft, NVIDIA, the very liquid things. I think you don't have to worry about as much as execution then. I mean, those things are traded. They're so liquid that you can get the price that you want. Even if you're doing mid, it's going to change anyway. I don't think they're as careful about price. They're more careful about either volatility or direction. And it's different. I mean, at a time when I was coming up, obviously you cared a lot more about price. We're also probably trading in a lot more mid-cap names. I think those are a lot more interesting. Whereas now we're trying to tell these people about trading very liquid stuff. I mentioned the Mag 7s, but also the SPYs, the Qs. So I don't think they have to worry about price as much. I think you're a little bit price agnostic. You kind of care more about the volatility you're trading and possibly direction and trying to pick right strikes.
How do you help traders manage risk and size positions during volatility shocks?
Let's just take oil, for example, right? That's a big one. I mean, we've seen how much oil has meaningfully changed and absolutely changed the market. I mean, the equities, look how much it was influencing equities a couple of months ago, and the way the skew was changing. We're trying to talk to people about that all the time, how skew is different in oil than it is in, say, something equity related. Same thing what we were seeing with gold, right? We saw the huge move to the upside in gold until it wasn't. And all of a sudden, you could see it was almost flat skew on the downside and upside in gold. And that's how you knew something was about to fundamentally shift. We haven't seen that with oil, honestly. It's still been upside bid. Even when the price falls like it is today, apparently, there's still an upside bid to it. So I think we're always trying to call those things out to make sure that they see it, because those, I think, are the inside things that you just had to be at a firm once upon a time. You had to actually work at a firm to know the type of thing. Whereas now you have professionals like myself trying to help people understand.
What are the biggest gaps in trader education, and how should we measure its impact?
Zero DTE is an interesting one. I think a lot of people think about that as far as volatility. And there's a volatility component, but in my opinion, it's not. Like, it's just either in or out, right? It's almost binary, if you will, which obviously is becoming a big thing these days. I would like to see people transition a little bit more to doing something 2 to 3 months out, those being the majority of their trades. I think you learn a lot more about options and different ways to utilize them. So I think understanding of volatility, the understanding of volatility is still a big thing. I mean, you still have situations where, let's take, for example, what's going on with the semiconductors. They're back in vogue all of a sudden, right? And some people are thinking they're getting extended. And so as a result of thinking they're getting extended, they want to buy a put. Or when you see crazy things like Avis car, that the way that went up real big recently, I think a lot of people were looking at, let me just buy a put, but it's hard. You have to get a ridiculous move, which you kind of did in car. But you really have to learn how to, like, volatility, when you're buying a put on a name that's moved up big to the downside, it's really probably not going to move much, right? You're not going to make what you think you're going to make. I think that's one of the biggest gaps of people understanding how those moves transpire. I think if for some reason we have to create another PDT rule, then education is not helping. So hopefully we don't have to create another one. Hopefully we don't have to create these type of rules and guardrails. Hopefully there's education out there to help people understand.
Do retail traders prefer options-based ETFs or building their own positions?
I think our customers definitely prefer to build positions without using the help of those, I think. I mean, our people are a lot more educated. They're active traders. I also think sometimes in a lot of those products, and without knowing any specific ones, the few ones I see, they don't necessarily always have liquid option markets. And again, I've mentioned, like, that's the biggest thing for our traders. We want liquid option markets. So I think at some point, if it's a product and it's interesting and it has a liquid option market that our people could take advantage of, they'll use them. But for the most part, I think they prefer building those on their own.
How is TastyTrade integrating AI without overcomplicating the platform for retail users?
I'm on the content side, I'm not on the brokerage side, but I know our brokerage is very interested in trying to keep up with whatever the needs are for our customers. So there's a few AI things related that are on the platform now, I think, to help people. But at the same time, aside from the brokerage, I've created some piece of content more recently about battling AI as whether it's better than me creating strategy. I don't think it is. But I think they're really helpful, especially for people who are new and trying to learn things. And I think a lot of times people want to learn things very fast. And I think AI is good with that. And, maybe that's the type of tools that we're going to have going forward.
How will the retail-institutional balance evolve in 5 years?
I started off at a prop firm. That's where I learned everything that I know. And I remember there was a small little operation at one point in time that they created sort of just geared towards the few retail trades. And this was, 15 years ago. And just trying to take advantage of that flow that would come in really small. Now, fast forward, we've seen this explosion with retail, particularly in near-term stuff. At least a lot of people feel that way. It seems to be the data showing that. And I feel like retail institutional is certainly paying attention to that. They're certainly taking a lot of the other side of that flow. Because again, like I said, especially our people, again, they're mostly in liquid markets, but the majority of retail doesn't really think about putting on a trade at mid-market. A lot of times they're pretty aggressive. I mean, I'm always trying to tell people, even who just want to do stock, people come up with an idea and it'll be like a Thursday night, like, oh, cool, I'm going to put in an order to do that tomorrow. Like, no, you never want to do that type of thing, right? But I think retail is creating a lot of flow that institutional is really interested in. And so going forward, I think you're going to see a lot more of that participation. I don't think the retail trader is going away. I think they're only going to get stronger.